Welcome back. We're all anxiously awaiting this month-end close for the stock market, but there's plenty of other markets on our minds. And joining us now is Phil Strebel, Chief Market Strategist for Blue Line Futures, and he's got his eyes on some of these other products. Phil, happy Friday. Thanks for taking the time to join us this afternoon. Let's talk Bitcoin, because although the equity market's got a bit of a bid here today, intraday, Bitcoin's been eerily quiet. What do you make of Bitcoin?
It's turning back a little bit lower. It ran into that old resistance when you go into like December and you go into January, that double top that we saw just over the 110,000 mark. The market was channeling upwards higher, broke out through that resistance level, but it really didn't have that firepower and that banged on, pushed it up onto new uncharted territory. So kind of settling back here, breaking a bit below support here. And then I think that we're kind of starting maybe this new trading range from 98,000 to 112,000. Sounds like a wide range, but it's just the nature of the beast with that particular product.
When you look at how it's performed, and we'll tie this into our next discussion, which is kind of gold and silver and traditional metals and the role that they play, have you been impressed by how Bitcoin performed and sort of the ability to recover and make new highs faster than the market? And it seemed to have turned with a little bit more velocity than the stock market, kind of in the depths of the uncertainty in April?
Yeah, that was the canary in the coal mine when Bitcoin started to break out to the upside, took out some key levels like 85,000, 92,000, and it just relentlessly would not stop going up. That was kind of your indicator that it was a risk-on environment again, and we start to see the NASDAQ here catch up, the U.S. equities, and then everything else followed suit. Perhaps it was a retail investor just going in, looking for a place to park some cash while the dust was still settling, because the retail investor really front run the institutional investor this go around, and we saw that take place, and that's where we get these massive thrusts up when they're trying to play catch up.
When you look at a market like gold, which is traditionally served as sort of that traditional risk-off asset, but in like times of serious risk-off, not hey the equity market's down a little bit of a flight to quality, more of like there's truly like structural concern type of risk-off. Gold's done really well for what's going on 3 to 5 years now. It's a volatile asset, but all things considered, it's sort of been in a choppy range. What do you make of the price action in gold and to a lesser extent silver?
Yeah, so I was talking to one of my buddies, and he's a bit of a stat nerd when it comes to the metals markets. And what he had told me was that he asked me to guess the range for April in gold, and it was like north of $500. And then you go to May, it's about $225. Well, if you go back over the last like 20 years and you average it all out at a monthly fluctuation in the gold market, it's been about $85, what we see on an average month. And what the significance of that is if you take the average true range on gold on a daily basis, it's about $85 right now. So gold is really headline driven, a lot of whipsaw action, and there's two likely scenarios in the gold market. Either you get this uncertainty again, this hard stance on tariffs, the flight to safety into it, and you see gold futures break out over 3,400. That's where we've got this bullish flag pattern, and we could potentially start hitting all-time highs, 3,600 and above. Now, the problem that gold has is that also on the same chart pattern is it's got a series of lower highs here. And frankly, with a little bit of a risk-on environment in the U.S. equity markets, you could see gold futures back off to about 3,250.
Yeah, what I find super interesting in this market, and I love the statue, which just sort of highlights that, is like the actual day-to-day movement is still very dramatic, but we're not going anywhere. So implied volatility levels and like option premiums have collapsed in gold, because on balance, it's just a tug of war. It's just a volatile one back and forth here. Let's close out with crude oil. I've said this several times. If we think gold and some of these other markets have been kind of eerily quiet, which maybe gold hasn't been, crude oil has been so quiet and stuck in this range. If you were to kind of say, hey, breaks lower, breaks higher, which way do you lean?
Well, it's going to be this weekend because we've got that OPEC meeting, and they're already gearing up for larger production increases. So that's why we saw crude oil futures take a little bit of a leg lower here today. The reality is that they've always come out with these larger projections, but it's been very difficult for them to get that production online and actually meet those expectations. So I think Sunday night, perhaps a little bit of a sell-off, then the devil in the details, and we look going forward where prices could recover. So we scaled back a lot of energy exposure here coming into the weekend. One note that I did see is that with the traditional 60-40 portfolio, a lot of people have and it underperformed this year and over the last couple of years. Adding other components and small components like gold, copper, silver, crude oil have really dramatically improved those results, and it's something that people really want to, consider doing. And I'm just saying in a small way, not with the futures way and things like that.
What's a reasonable level if you do get a break lower? Is it this 55 level that we kind of bottomed out in early April? Looks like we tested it again early this month. Is that a reasonable place to say, hey, they get a little bit of a flush for buyers to maybe step in crude?
I definitely think that people are eyeing that level. That was the big washout low, and the market clearly rejected that because once you get down to a certain level and you press so low, producers are going to go, hey, we can't produce at these levels, and then you'll naturally see supply start to dry up. Plus, we've seen recession risk fade. U.S. equities are just they're only a few percent from all-time highs. So it just makes sense that oil here, the demand structure should start to come back and bring itself. And I think that's where oil prices go up. The only problem is, the gorilla in the room where the administration is going to come out and criticize any kind of, higher price in the oil market. So it's going to be a little bit of whack-a-mole if we do start to poke up anywhere in the 70s or even above there.
Yeah, super explicit in that space, but I'd almost argue that's kind of the scenario in every market right now. It's like nice performance, kind of gives the leeway for there to be a little bit more hawkish rhetoric. And then as things get a little bit more sour, the dovish stuff comes out. And so it kind of goes across the board. Great setup in the closing of the month here. Phil Striebel, Blue Line Futures, always a pleasure. Have a great weekend.